Hi there, a very good morning, good afternoon to all of you, depending on wherever you're watching me. This is Simply Stocks, and I'm live with another video. And today's video is a weekend video on the market analysis, how the market has done so far. Plus, there is a stock in the small cap domain that looks good from a long term point of view. So, we'll discuss about that in detail. So, let's get started. First of all, disclaimer that this is not a stock recommendation. People taking any position to any share that I talk about should that be done due diligence and research. And I'm not in favor against any company that I talk about. Whatever discussions I have with respect to the companies and the markets is purely on my educational purpose, on the basis of my education. And this whole video is on an educational purpose so that you understand as to what I have learned over the last 12 13 years, and I want to impart that knowledge to you all through the medium of these videos. So whatever decisions with respect to investments you take, kindly do consult your financial advisor. So before I talk about this company and the markets, here's a small request. Can you support me on Patreon? Once you do that, it help me grow the channel, help you also ask me questions, seek out answers in greater detail. Once you get the $10 membership, you'll have access to my portfolio, my watch list, and number of podcasts I put out from time to time. Also, you get answers to all your queries. Plus, I have discussions on markets, discussion on global and Indian economy, how things are going. Everything get discussed there. So you can be a member on Patreon or on WhatsApp. You can email me for that. Now let's discuss about the markets first. For market analysis, let me first take you to the TradingView website. The stock I'm going to talk about, just to give you an idea, is Venus Pipes and Tubes. So we'll discuss about this company in a bit. But let's discuss about the markets, why it fell, and where is the market at the moment, and how things are panning out. So if you look at here, this is the Nifty chart, and we saw that a correction brewed up from the 2nd of September, and there is a little bit of correction that has taken place. So from a high of say 25,300, we are down 500 points, about 2% on the index. So very little correction, if you call it. And I believe that now that it has broken the 20 DMA, which is the 24,900 levels, I think we are headed lower from here. We could go towards 24,500, 24,400, and that's where we may find support because the global indicators are not that great. Dow fell on Friday night India time, and I believe that there is more correction in the fray. However, I'm still a firm believer that in the next 3 months or so will be much higher from where we are at the moment, and we should scale 26,000 over the next 3 4 months. So that is how I believe the picture could be in the next 4 months, and hence I'm not very perturbed with the kind of you can say fall we are having. But what are the reasons for this fall? So let's go one by one. The first reason I believe is you can say Indian centric in nature, which is regulatory in nature, and it is a combination of two things. One is that P note thing and that FPI thing that has cropped up over the last 3 4 days that has soured the markets, and we had that deadline on Friday. So we'll see how things go about. Probably the markets will feel the jitters of that. Second thing is the fact that there is a lot of things taking place at the SEBI office with the chairperson of SEBI and whatever is going on. I won't not like to go into details, but there are things happening there. So the market is feeling the pinch of that as well. So there are, you can say, negatives at the moment for the markets to look at. If you see 2 months back, a month back, month and a half back, there were very little negatives, and the market kept on roaring higher. Even now, I believe that these, you can say, these bumps in this bull run could be short lived. I don't think that this is going to derail the market unless something big like a fraud kind of thing, or a big thing comes about which really gives a very bad taste for the market environment. Otherwise, I think the market should chug along higher from here. So all said and done, I believe that this is a buying opportunity. what levels you need to look at, probably 24,500, which is the 50 DMA. Around those levels, 24,500, 24,400, the market could bottom out at the most in terms of Nifty. If you look at the mid cap index, so if we open that up, then here we are at 58,500. Here the correction has not been that big. In fact, the high was around 59,600, so only a 2% correction here as well, no more than that. This one is closer to the 50 DMA, 58,500. So it is nearly the, sorry, 20 DMA. Again, we could see a 1,000 point correction here as well, and be which would be good for the market from a medium term point of view, from a 6 months point of view, because the corrections are always welcomed in a roaring bull market, because that gives opportunities for players who are waiting on the sideline to get into the market. I think that is exactly what is going to happen. Now, what are the sectors that are going to do well? So, all said and done, I believe that with the rate cuts on the NWay, that rate cuts will take place, and at least 25 basis point will happen if the commentary is a slightly positive for the market. I think beyond September 20th, we could see a decent rally over the next 2 months or so. In that scenario, what are the sectors that are looking very good? Let's discuss about that. So, if I open up indices here, then we see that there have been three, four indices that have done extremely well over this period. So if you look at Nifty Healthcare, that has done well. So this is a Nifty Healthcare 1 year chart. You see that the high has been around 14,600 or so, 14,670, and it has just dipped a little bit. So I think hospitals and healthcare kind of stocks could continue to do well, especially with the winter season coming along. That's one. Pharma, along with healthcare, should do well, and pharma has been doing well and making new highs. And you need to understand that 15,000 was the high in 2015, around 15,000 levels was the high kind, 14,000, 14,200. Then it was taken out in 21, and then there was a dip. So around 15,000 is your pivotal level. Over the last 1 year, that 15,000 levels have been breached completely, and we have seen a tremendous rally from here on in. And even now, I won't say that it is overbought with the RSI around 68, and the market the pharma index is only around the 10 DMA. It's not that it's extremely overbought or something. So a little bit of correction. I think this could just continue over the next 3 to 6 months at least. Pharma and healthcare rally. And the third in my list, out apart from these, are the consumer durables. I believe that the consumer durable pack should do well here also. It made a high of, if you see here, it made a high of 42,000 or so. It's not far off from that high, and again it is chugging along extremely well. And in this pack, you have the white goods that are doing well, you have consumer discretionary that are doing well. So consumer durable, consumer centric companies, new age companies also, if you pick that up, that's the fourth sector. I believe that new age stocks, you have the Zomatos, Nikas of the world. Even Paytm is now doing well. You have internet firms like FL, Just Dial, etc. Some of them could be in my portfolio. So all these companies are doing well. So as a basket, this internet theme, new age theme, looks to be again making a move. So apart from your, you can say, usual players like IT, everybody is looking at IT, large cap, larger mid cap IT. I believe that these three, four sectors could end up doing extremely well. Would not like to talk specific stocks here, but these sectors one should definitely look at if you're trading short term. If you're talking 3 to 5 years from here, I think whatever is happening in capital goods, real estate, and defense names is pretty good for somebody who want to build a portfolio from a 5 year perspective, because there is still a long way to go in railways, defense, capital goods, uh, and real estate infrastructure, especially with the interest rate cycle peaking out. These sectors should end up doing extremely well over a 5 year period, not that they will do well over the next 6 months. I think over the next 6 months, I think healthcare, pharma, somewhat IT, small cap IT firms, new age companies, these should, and consumer oriented companies, your Zomatos of the world, and other direct consumer, food consumer plays should end up doing well. Now let's discuss about one of the companies that I mentioned. So Venus Pipes and Tubes. This is an interesting company, a 4,000 crore market cap. It's a small cap company, and this is a stock I'm analyzing at the moment from a point of view of 4 to 5 years, not as a trading play, but from a 5 year point of view. So if you look at it, 4,500 crore market cap, and let's straight away go to the numbers, and then we'll discuss about the business altogether. You look at the numbers, what really intrigued me was the June quarter numbers. Now, remember, most of these pipe companies, most of these infra ancillary companies talked about the elections, talked about that their business went down sharply because of the elections in April and May. And so the numbers were not that great. In fact, other companies as well, which are related to high end consumer discretionary and other sectors, which are India centric in nature, they talked about the fact that because of the elections, the quarter was very subdued or muted. And then you have something like Venus Pipes coming out with these numbers: 240 crores of sales versus 180 crores of sales. Operating profit of 28 crores was in last year, and this time around they have come out with 48 crores of operating profit. Margins have expanded from around 15% to 20%, which has been a marked improvement, and this was unexpected because, as I mentioned, because of the summer, because of the fact that there were elections. But the bottom line also grew sharply, and eventually from a net profit of 17 crores, we are at 28 crores. That's a jump of nearly 60%. So I believe that this trend could continue. This is a watershed kind of numbers from you can say Venus Pipes, and if this continues, this is a growth of, if you look at year on year, then this is a growth of somewhere around 33% on the sales front. If I take 33% growth to be the norm this year altogether, and with the margins to be around 20%, I think we are looking at very different numbers. So from 802 crores, we are looking at somewhere around 1067 crores with margins of around 20%, so around 213 crores as your operating profit. And if I calculate further, say looking at the other income part, etc. So let's just calculate the final numbers, and we'll have an idea of what numbers could be in FY25. So if I calculate if we add other income and subtract yearly other these expenses of depreciation and interest, then we come out with 169 crores of profit before tax. That's 169 crores of profit before tax. I believe could be happening for Venus Pipes in FY25, compared to, if you look at in FY24, they did around 116 crores. So that is a jump of around 46%. 169, if I take out, you can say, taxes, then we have a situation where the net profit could be 127 crores versus 86 crores. That's a jump of 48%, and that corresponds to EPS of 62 and a half. So if I imply current, you can say, PE to this sort of an EPS, so let's see what has been the average PE for the company. It's around 45 for the last 3 years. It's around 45 for the last 5 years. So I imply 45 rupees as the EPS on as the PE was 62 and a half rupees of EPS. Then the target comes out to be 2800, and currently the stock is trading at around 2200 or so. So a decent upside even is still possible if the numbers continue to be that good. Having said that, because of this calculation, we come to know that current you can say price of the stock is not ultra cheap, not something that one should really go out and buy big time. So wait for further corrections in the market to get into the stock. But even at current levels, so one can definitely look at from a 2 3 year point of view to start accumulating as an SIP and or buying on every 5 to 10% fall would be looked at. But then you have to analyze numbers and then keep on analyzing numbers and then reviewing your status of the investment, because this is a small cap company. Be very aware, this is a very small cap company, and it one bad quarter could trigger a 20 30% decline in the stock. So kindly take that on note. So if you look at the shareholding pattern as well, 48 49% is with the promoters, which is good. Around 5% and FII holding has increased over the last one quarter. 4.3 from 4.3% has gone to 5.1%. DII holding has also increased slightly, now 13.2%, and public shareholding is around 33%, in which 3.5% is one with one large investor. So decent FII and DI holding, not too great, not bad either. Overall, the company looks good. Now let's just discuss about the details of the company per se. So basically, Venus Pipes and Tubes is a manufacturer, exporter of stainless steel pipes and tubes, and the company is manufacturing stainless steel tube products in two broad categories, which are seamless tubes pipes and welded tubes pipes, under which five categories of products are manufactured. So mainly they produce stainless steel pipes, etc., and tubes. Let's see where how's the revenue bifurcation. So seamless pipes are around 60% of their revenue. Welded pipes around 38%, and others are around 7%. So that's how, oh sorry, 2 3%. If you look at uh, let's have an understanding of geographical revenue bifurcation. Domestic revenue is around 63% of the revenue comes from domestic. Exports hold 10%, and stockists have 27% of the revenue coming from there. So not a great export oriented company, only 10% export, but from India they are doing extremely good, and that's why you see the numbers as it is. So company serves a range of industries with 58 Fortune 500 companies as customers in India, namely Adani Group, LT, basically LT, Amul, ITC, Cipla, Asian Paints. So big clients they have at the moment, and they have an order book which is standing at around 200 crores as of now, 200 to 250 crores or so. So overall, the company has a very robust business across the board in India and abroad, and I feel that this business is picking up with interest rates cuts that is expected in India from December onwards. I think next year could be good for the whole of the industry altogether, and this should pick up going forward. So one can definitely look at Venus Pipes as an investment from a longer term point of view. But again, do your own analysis, and all the disclaimers do apply. So this is a video on Venus Pipes and the markets. Please like and subscribe my channel and hit the bell icon so you get my videos straight away when I post it. Kindly support me on Patreon. Thanks a lot for watching.